Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, and Mind Your Money. Today's April the 25th, 2022. We just wanted to bring you a market update and kind of give you an idea of what's going on with earnings, and then also what we're expecting with interest rates and how that's going to impact the market potentially going forward. All right, let's jump right in. Brandon, why don't you talk about earnings and sales growth and what we've seen so far out of the S&P 500 fund companies that are in there. The 500 companies that make up the S&P 500. I think that's better said in order to kind of give us an idea of what's going on.
Yeah, so we're in the middle of still that earnings season. So about 20% or so the S&P 500 companies have reported the earnings. And really what we're seeing is just kind of slowing growth from that end. So you're seeing it here within the companies that have reported already, about 2 to 3% growth-wise. It's slowed, right? We also
so you're saying negative 2 to 3%.
Yeah.
So it's negative 2 to 3% so far, which is a drastic difference.
Yeah, pretty big. But then your other world economies are experiencing this too, right? So China is actually starting to do more lockdowns, and their economy slowing as well. So that's kind of bleeding over to our markets as well. So that's something we're continuing to monitor and watch. But again, almost 25% or so of them have reported. So we'll continue to monitor that and see how the rest of them report, because we've got technology coming up now.
Well, see, what could put additional pressure on that is the fact that the Fed's coming out and they're going to be aggressive with interest rates. We've seen it. It's going to happen. Yeah. So really what we're looking for on May the 4th, there's actually about a 94% chance that we're going to have a half a point increase in the interest rates. So that's pretty aggressive. We haven't seen that in a very long period of time. But the thing is, if you follow that up, I'm going to give you some specific dates. On June 15th, there's an 83% probability that we'll see another half a point increase, again, being ultra aggressive. Mm-hmm. And then in July 27th to be exact, there's roughly an 81% chance that we'll see another 50 basis point increase. Yeah. So interest rates from now until the end of July could be 1.5 percentage points higher. There's a pretty high probability of that. Here's the key. When you're increasing interest rates that quickly, plus the Fed's doing $95 billion a month in quantitative tightening, in other words, they're pulling $95 billion out of the system. So we're tightening that money supply into a slowing growth market, which you just talked about, is going to put some tension in regards to the market and what can happen going forward. So this volatility that we're seeing now, we got the VIX back above 30, which means it's pretty volatile out there. Yeah. Should continue. So that uncertainty is there. The market's going to be challenged, and it's probably going to come in the form of the higher growth companies. So what are we doing with the portfolios? What are we doing there to help try to mitigate some of this?
Yeah, so basically, I mean, where we're positioned now, and again, we'll continue to make tweaks as needed, but we're just looking at, growth companies, value companies. We need to look at dividend paying companies, utilities, things of that nature. Those usually fare better in times like these. And historically, when we kind of look at the numbers and what we've dealt with the portfolios, it looks like it's working from that end. So we'll continue to monitor it. Keep in touch with these earnings, see what's going on there. I mean, and just looking at the whole world as a whole. Again, it's been a rough year, and it's all been interest rate discussion. So we'll just see what the Fed determines. They said they'll basically make their decision with the data that's in front of them. But the market's really pricing in, I think, some pretty aggressive interest rate increases.
I mean, they're looking for a total potentially 10 rate hikes this year. That's a massive move.
Yeah, it's pretty.
So the Fed is not sitting over there idle. Yeah. They're coming at inflation hard, but I think they've got to pay attention to the growth in the economies, globally too, because this may create a slowdown over and above so-called hard landing instead of a soft landing. Yeah.
But good. Well, thanks for joining us today. Just want to give you this quick update. Let us know if you've got any questions at all. As always, give us a call, email us. Pay attention to the podcasts we put out, the videos we put out, and everything that we have on the website. There's some really good materials out there. So again, any questions, let us know. Brandon Rogers, Trent Bradshaw for Bradshaw Financial Planning, and Mind Your Money.